What's up guys, Dirk here. In today's video, I actually want to look at some of the individual tech stocks specifically and how those charts aren't looking very good for the bullish case. Now, before I dive into the video, quick announcement. Starting today, I'm running a special offer to be able to get my intelligent trading course, which teaches you everything that I know about reading charts, technical analysis, the concepts of trading price action, how to trade crypto, how to trade Forex, how to trade stocks, the concepts apply to financial markets, how to trade with spot, how to trade with leverage. Everything is included. So in this course, it is literally the sum of over a decade of my personal experience of trading. I've put it all together in now more than 50 videos. I've even updated it quite a bit this month with more training. So if you want to know what is inside, if you want to see the special offer, there's 50% off. Click the link in the description down below. Full 60-day money-back guarantee. So come and learn if you're interested from me, how I read charts and how all this works. Link is in the description down below. Alright, so I want to start out with some of the big tech stocks because they have been really leading over the past, basically this year. So let's start out by looking at Apple, and what you can see here, and we can actually move it to the daily chart over here. We'll take a look at this, and you can see here Apple has come down quite a bit from the peak already. If you want to measure that, it is already down 15% from the highs back in July. So in the last 2 months, it is down 15%. But more importantly, I want to point out some warning signs for these charts for the potential bearish case. So you can see if we zoom out, that has been a crazy run for tech stocks basically over the last few years. And you can see here, even from here in 2019, Apple went from 35 all the way up to almost 200 here, right? So you can see that is a massive run for an individual stock, 430%. Now, as you can see, I already have some drawings here, very simple stuff, but this stuff is what you need to be paying attention to if you are looking at charts, because the price action is the same whether it's on a 5-minute chart, a daily or a weekly chart, whether it's an individual stock, an indice, whether it's Forex, whether it's gold. It all works in the same way with the price action, and there are warnings flashing here. So what are we seeing? Well, first of all, if we bring up the RSI, standard RSI indicator relative strength, you can see here, big warning sign is we see the price here make a higher high compared to this one, but over here, it hasn't been confirming it. In fact, it's been making a lower high. This is known as a bearish divergence. We actually saw it on Bitcoin also on the weekly chart. Remember when it made like 65,000 in May, it dropped, came back, went to 69,000, then went all the way back down. Now, the key with these divergences is it plays out on all time frames, 5-minute, 15-minute, etc. But when you start seeing them on higher time frames, the daily, the 3-day, the weekly chart, then it can really be something significant that you need to pay attention to that could lead to multi-week or multi-month downtrends, as we saw with Bitcoin in 2021. There's plenty of other examples. So that's the first one. Keep in mind also, I'm going to run through multiple charts here of multiple different individual stocks. And if you look at a chart in isolation, you know, that's one thing. But when you see multiple charts all showing the same kind of warning signals combined with other things, it is time to pay attention to potentially what's happening here and be cautious of what is playing out or what could be playing out. Now, okay, get back into this. We see this. This is one thing alone. Now, of course, what do we see here also is we see it took out the high and came back below it. So this could also just be seen as a deviation, as a liquidity grab. Any stops that were placed here, took them out, and now we are back below here. And now the danger is to the downside. So obviously if we reclaim this and we get back above here, maybe it continues going. But as long as it stays below this, you can see the risk is potentially to the downside, especially combining it here with the negative RSI divergence. Now, another thing I want to point out over here when we zoom in a little bit is also the fact that this played out in this way. Now, what I mean by this, okay, we can see a few things. One, you can see the gap down here. This happens because the markets are not open 24/7 like with crypto. So when the market closes and it opens, if there is a jump in the market between those times, you get these gaps. Now, often these gaps tend to be filled also. You see it all the time. It's not a 100% requirement, but you can see here, even anywhere where there were gaps, like here was a gap, it came back down to fill it when it went up. You can see over here is a gap that it filled there. here it filled these gaps. So that's something to pay attention to also. But it also has this confluence where we put the Fibonacci golden pocket here. So we can say there has been a break in market structure here, where you can see it broke below that low, it broke below that low. So that is already a warning when we break this market structure, because what it means with market structure is in a bullish trend, it keeps making higher lows. As long as it keeps making higher lows, then the trend is bullish. But here, when it makes a lower low, it broke below this one, broke below this one, then it's a warning sign, because now we've made a lower low, and that can potentially signal a trend change. And what tends to happen is after that market structure break, where it makes a lower low compared to these, it goes back up to the Fibonacci golden pocket. If it's rejected there, then this is basically what it does. Keep in mind, markets move and the price action moves in such a way to manipulate people, to trap them, to liquidate them. So when this drops like this, obviously there's a lot of people here who are shorting, hoping it goes down. When we get that rally up, it liquidates those late shorters. They get tricked, they get forced to cover, and then eventually it just continues going higher. Or it tricks people in the same way that it drops, it goes back up, and over here, people start to get bullish again, thinking it's continuing higher, and then it continues lower, okay? But this is a very common pattern that we see. We see it go up, we break market structure, right? Then we come back to the Fibonacci golden pocket, and then it continues lower. So this is also a very nice pattern to be able to trade. By the way, guys, all of this I teach in my intelligent trading course. So if you want to learn more about this and you want to know how these concepts work, link in the description down below. 50% off for as long as the special offer lasts for the next week or so. So we currently have this setup here on Apple, okay? So there's a lot of reasons here for potential more downside. I will only start to consider here from a chart-based technical perspective that we get more bullish once we reclaim this and once we get above here. So if we can somehow get above there and flip that into support, then we can look at continuing the upside. Until then, this is just bearish in many ways. We have the larger negative divergence. We have the deviation here above this previous high. We have the retest here of the Fib golden pocket. And this just looks bearish on Apple. So let's move on to some other charts. So let's keep it to the tech stocks. We're looking at Amazon over here. This is the daily chart, and you can see also it had a very nice run here from about 2016. It went up by 400%. A lot of these stocks that I'm about to show you, the big ones obviously, went on massive runs over the last few years. So what can we see here that is interesting here potentially too in terms of potential tops? You can see what I've drawn here. We got this diagonal. I'm not really a fan of diagonals, except for in this one situation like this, where we often do get a break of the diagonal. You can see the trend is up, and a retest of the diagonal and a rejection. And this is especially important to pay attention to when that is combined with retesting the Fib golden pocket here. So you can see we broke below it. We put a Fibonacci golden pocket from here to here, and you can see this kind of lines up here. So the trend line, the diagonal on its own, I would never really use that for any specific positions. It's just more for confluence, because you know you can move it at so many spots and you can make it fit whatever narrative you want. But in this kind of situation, I always like to look at it, especially for shorts here, that if we break below this trend line, come back up to test it, and that has confluence with this Fib golden pocket, that increases the likelihood of the trend having changed and this continuing lower. Now, one thing, of course, to pay attention to is if this can somehow reclaim this level here, the 0.70%, the golden pocket, we can flip that, then we're probably looking at new all-time highs here for Amazon. But for now, we have kind of met this criteria that I'm looking for bearish action, these highs over here. So let's see how that ends up playing out. We obviously also have these lows over here that it likes to look for in terms of being able to grab that. You can see it retested this low, but it hasn't taken it out. So if it does continue lower, we are probably looking at lows below the low here from December 2022. So let's take a look at Google over here, so Alphabet. And one thing here that I want to show you that's also pretty interesting how this works with the Fibonacci golden pocket. Look at this, okay? So we take from this low all the way to the high, right? The last major impulse move here that ran from March 2020. Okay, if you take the ruler, you can see that was a big run. That was 200%, so 2x move. to the upside. You can see on the pullback here when it dropped how perfectly it just stopped with the Fibonacci golden pocket and how well this tends to work. So this is again something I break down inside the course in a lot more detail and explain how it works. But you can see that this works not just on individual stocks, it works in crypto, it works in Forex, it works on metals. It's just really worth paying attention to for finding optimal positions for entries. You can also see how this actually ended up over here, where it took this low ever so slightly. You can see it went below it and then went higher like that. And this actually makes it much more likely for a bounce to the upside where you can take a position to buy and that you save yourself from entering too early. All the way down here, you could have avoided that, and you can set alerts, because this took months, right, to be able to drop. But you can set alerts, and then at a level of interest, potentially when it's looking like it could bounce, you could have got potentially in there for the upside. Okay, so that's just something I want to point out. That's a very cool tool and concept that works across many different financial assets, basically very often, very accurately. So what I want to bring to your attention right now is that this obviously looks different to Apple in the sense that Apple had a deviation above the previous high, right? It had that high that I showed you, it deviated below and could potentially go lower. So here we have not yet had a higher high, but we can already see there is over here on the daily a bearish divergence that has been forming, which is indicating a potential warning sign here where the price is going higher, but the RSI is not confirming it, the relative strength, meaning that there is potential here for a reversal. Now, if we do get some sort of squeeze up, could it also do the same as what Apple did? Could it continue higher, go above the high, and then drop? Yes, that is a possibility. And if that were to happen, what I would look for is the sweep of the high and a drop back below it for a short position on this specific stock. We put the stop at the high of the sweep, and then it could potentially go all the way back down. So you can see for now it is still making higher lows over here, right? You can see it's still here in a bullish trend. It's making higher lows, even here. So if this gets below here, below this level, I would start to be cautious because it's a break in market structure, and that could likely signal that. Until then, on the specific charts, I wouldn't be looking for anything just yet. Let's wait for either a break of market structure here with a low below 115 or potentially a sweep of the high. We'll have to see how that plays out over there. Now we have Netflix, which is interesting because it also brings back the concept that I shared with you 2 charts ago, or 2 or 3 charts ago, with the diagonal break and retest. And you can see what has happened here, right? So if we just simply draw this diagonal, you can see it's very clear. It was in an uptrend all the way, it bounced here, it went up, and then it broke below it. Okay, so at this level, obviously people got very bearish, thinking it was going to go down. And what does it do? As usual, it tricks people and it has this bounce. Okay, happens over and over, whether it's a lower time frame or higher time frame chart. In this case, obviously this whole process took many months, right? But you can see also, obviously we have these gaps over here. This one got filled when it went back up, and you can see what did it do over here. This wick, you can see how that filled that gap. So when you see that gap, especially this happens a lot with markets, non-crypto markets, because obviously crypto is open 24/7, but any market that closes intra-week or intra-day or on the weekends like Forex, you can see these gaps are worth paying attention to because they do end up getting filled. You can see even here, it came back down here. Where did it come to? It came perfectly into this gap, and then you can actually use that to your advantage, because if the theory is that the gap gets filled and then it bounces like it did over here, you can wait, set alerts, wait for that gap, for the price to come close to that gap, and then put your stop just below it, because if you're wrong and it continues going, you want out. The idea is invalidated. But if it just comes to fill the gap and then continues in the trend that it was, if you got in that, look at the upside over there, right? So this works in many ways. In the same way that here, once the trend broke to the downside, this gap over here, once we started getting this could have been a short entry with a stop just above the gap, targeting potentially lower. And so far, that would have been a really, really good entry. Combine it with your diagonal over here, and let's just see what happens if we put a fib on it. Yeah, it didn't quite reach the fib golden pocket here, but it filled the gap, it retested this. So in my opinion, this is still bearish. This is not good for bullish conditions here on Netflix. If we get back above there, this level, I would start getting interested in potentially a run to taking out the highs. But until then, this just does not look good. We obviously also have to look at the market structure on this recent run up. So if we get here below 315, if it makes a low below this, then we have this market structure break to the downside, and then it becomes more likely, if we get that we are targeting these lows and below. And you can see, based on this as being a daily chart, that could still take a long time before it actually gets there, but that is potentially how I'm looking at these charts right now. Now, just for fun, let's take a look at NVIDIA, okay, because that went on a crazy run this year. You can see that went up an insane amount. It went from 110 to 500, so 360%. Massive run. Now, based on everything I've shared with you so far over here, can you see how these same concepts are about to play out over here? What is the first thing that you notice? Obviously, this massive gap over here. So, how I've been talking about gaps tend to get filled. Well, it's going to be very likely that this gap is going to get filled at some point, and we're on the way down. What else do we see here? Okay, we see, obviously, on the daily, we see a bearish RSI divergence here. Okay, you can see on the RSI, it's making lower highs, while here it had these three thrusts. This also is very much something known as Wyckoff. Very typical here, where it has these three thrusts. It's a complicated method by someone, Richard Wyckoff, many decades ago. He figured out the system of how there's accumulation and distribution. I'm not going to go into that. You can Google that if you want. I actually do explain it also inside my trading course. So, you know, if you want to get that special offer, link down below. Come and join, come and learn. But okay, so we have this concept here. Wyckoff distribution, negative RSI divergence. We have this gap over here, which is also you can see this previous high lines up very much here. So what is going to be interesting to see is, if we get this gap filled, does it fill it and bounce and continue higher like that? Okay, so this is obviously something you want to pay attention to. You want to set alerts. If we get this, it fills and it bounces and it doesn't get back below, that is potential for upside continuation. But if this fills and it gets below, then we might be looking at eventually, at some point, when we get our crash and when we get our bear market, at taking out these lows once again. That's going to be interesting to pay attention to. Either way, if I'm looking at this chart, you know, this is obviously not a place where I want to be taking long positions for the long term, especially after it's had such a big move up. So just interesting to see how these concepts play out over and over on different charts. I've put this all into a course. It's more than 50 video lessons. If you sign up and you get lifetime access to that course, by the way, it's a one-time payment. It's discounted to more than 50% right now. So if you want to sign up, click the link in the description down below. You get a full 60 days to try that out and get access to everything. Go through the course. If you're not happy, you send an email to support and you can get a full refund. But this is where I teach all these concepts, and I continue to add to it over time. More examples, more training, more concepts. So once you're in, you get access to all those future updates. And if you find this interesting and you want to learn how to do this for yourself, I highly recommend signing up for the course. Click the link in the description down below. It's the best price you'll get it at, and hopefully I'll see you on the inside.